Hello, everybody. Hi, how are you doing? So thank you for coming out on a Tuesday night. It's great to see the room full. As Lisa mentioned, I'm Stephanie Hurder. I'm a partner and founding economist at Prysm Group. We're a group of PhD economists who work with blockchain organizations on their incentive design, market design, token economics, governance, and other economics-related issues. Before I start, I do want to thank the Open team and Cross Campus for having us. And this is a beautiful meetup, and it's great to be in the space. So I have a PhD in business economics from Harvard, and I've worked as a researcher at MIT, at Microsoft Research, at Harvard Business School, and at Merrill Lynch, among other places. So before I begin, I'd love to get a feeling of the comfort with blockchain that's in the room. So how many people would say that you're pretty comfortable with the basics of blockchain? All right, that's pretty good. How many would consider themselves to be experts? You work in the space, you have an active crypto portfolio. All right. Sure, there's a few more hands than that. How many people are still learning the basics? There we go. All right, and do we have any economists in the room? Okay, great. So just to give you a brief overview of what I'm going to talk about, I'm going to speak for about half an hour. I'm going to start with a very, very brief introduction of what is blockchain. I'm going to talk about an example that illustrates some of the economic challenges of working with blockchain, talk a bit about what makes an effective platform and what this implies for blockchain organizations, and then I'll talk a little bit about economics, the fields of economics that are applicable, and I'll end with some examples of blockchain organizations tackling interesting economics issues. And after the talk, there will be a Q&A. All right, let's get started. All right, many of you will know this, but just to make sure we're all on the same page, what is blockchain? Blockchain is a distributed ledger that allows for the secure, decentralized storage of information and transfer of assets. Breaking this down, a ledger is a database. We use databases all the time for lots of important information in our lives. My bank stores how much money I have in my bank account in a ledger. And typically when we have a ledger with important information in it, we trust some kind of central clearinghouse to keep the ledger secure and accurate. And this is a trade-off we typically make. I trust my bank to make sure that they keep track of how much money I have. And in exchange, I may not have access to this information all the time. And that's the kind of trade-off that we're used to making. What's so exciting about blockchain to so many people is that it allows you to have a secure, accurate database without the need for this central clearinghouse. How did they do this? So first, the ledger is distributed. Everybody has a copy. So if I want to check how much money is in my bank account, and I know where to look, I can check the ledger and I can find, if Chase's website is down, it doesn't matter, right? I can always find out what my account balance is. Secondly, it allows for peer-to-peer transactions. So if any of you have ever tried to send money overseas, you know how hard it can be to send something that you own to somebody else. The blockchain allows peer-to-peer secure transactions, and in certain cases, if you're using smart contracts, these transactions can be self-executing. And so what's so exciting about this, and what we see at Prysm Group with the organizations that come to work with us, is that people are really embracing this decentralization. And the amount of decentralization varies by project. You can have very traditional startups who are excited about giving people more access to data and self-executing transactions. And you can have more radical startups that want to get rid of the central authority altogether and create completely democratic institutions. So as an economist, this sounds really exciting. We all like more democracy. But as an economist who studied market design, this also poses some challenges. It is difficult to design an effective decentralized platform. And before I get into the economics, I'm going to start with an example. So how many people in here have used eBay? Users of eBay. I've used eBay for years. I love eBay. It took me a while to trust it, but now I'm a big fan. So there's a competitor, a blockchain-based competitor to eBay that's called OpenBazaar. Has anyone used OpenBazaar? We got a couple people using OpenBazaar. So OpenBazaar is blockchain-based. It's a peer-to-peer marketplace. It's an open source software. You can just go and download it and install it on your computer. and you pay in cryptocurrencies. So I think right now they take 3 of them, and this is where the blockchain comes in. And the reason I like this as an example is you can really see them embracing this decentralized ethos. So on the right-hand side here is OpenBazaar's website. Sell anything, 0 platform fees, no platform fees, no monthly fees, no listing fees, no middleman, peer-to-peer, right? Pure, unadulterated democracy. And this is great, but it also has some drawbacks, especially from the point of view of a user of a peer-to-peer marketplace. All right. One moment. Pointer died. All right, so one of the assets of using eBay is they have what's called dispute resolution. And dispute resolution is actually really important for a marketplace from an economic point of view. Because it means that no matter what happens, if one of your transactions goes off the rails, there's a way for you to get a resolution that most people would consider fair. And if you use dispute resolution on eBay, you go to this website, they have a couple of pre-programmed options, like I didn't get my stuff in the mail, and then there's literally a choice that says, my problem is not listed here. And you can very quickly get to an actual person who has quite a bit of power. In contrast, OpenBazaar also has dispute resolution, but per the ethos of the platform, it's decentralized. So I'm not going to go through all the details, but basically what you have to do is you go and recruit a third-party moderator who has some power, but not as much as on eBay. And this is an older slide from their very first pitch deck. I just really like the title. And so as a user of eBay, I look at this and I think this sounds complicated and challenging. And the reason I use this example by name is because OpenBazaar has actually discussed in public the difficulties of running an effective decentralized platform. So this is a bit of a long quote. I've taken it from their blog, but I just think it's perfect. So what they say is, traditional centralized e-commerce platforms have dispute resolution to prevent fraud and scams. These companies control the platform directly, so they have lots of power, and the fees you pay to the platform are what fund this service. This type of top-down centralized dispute resolution is impossible with OpenBazaar, which has no central point of control. However, a platform which has no safeguards to prevent fraud wouldn't be very appealing to use. Therefore, we have this other system, and then they talk about the development of their dispute resolution service. And what I think this is a great illustration of the challenge of building effective platforms when you're dealing with a decentralized environment like those that people who are working with blockchain are dealing with. So with any business, if you're building an economic platform like a marketplace, even in certain respects like a firm, of course you need a good value proposition. You need to have people who are willing to show up and pay to use your platform. But there's a whole bunch of other pieces, rules and systems that support the delivery of the value proposition. And I'd like you to think of this in terms of a platform like eBay. So you need the incentives of all the parties to be set up so that people do what the platform needs them to do. You need contracts that have the right information and renegotiation if something goes horribly off the rails. Buyers and sellers need to be able to find each other. So this is something called market design. If you show up on eBay, there's millions of listings. How do you find the person that you want to transact with? How do you negotiate? And what kind of reputation information is saved? And what kind of means of exchange is accepted? What currencies? Do they take credit cards? And then overlaying all of this is what we call governance, which is basically what do you do when the existing rules don't apply? How do you deal with exceptions? And how do you deal with the environment changing and the platform needing to adapt? So in a standard company like eBay or Amazon as examples, these are typically managed through a combination of rules and authority, right? So if you think about eBay, there are rules about how the contracts work, there's rules about how the market works. They have to be, or else no one would know what to do when they came and used the platform. But some of these pieces are managed by the corporate management, right? If an exception pops up or the platform needs to pivot because of a change in the environment, they're relying on the central authority that has power to make sure that the platform stays useful and profitable to its users. If you're dealing with a decentralized blockchain project, you still need a lot of these pieces. Do you need all of them? It depends on your project. But you need to make sure that these services are there to deliver your value proposition, and you need to design them in a decentralized way. And if you're dealing with a platform where there really is nobody in charge, if it's truly decentralized, you have to have all of this figured out and hard-coded into your platform before you even launch. Because once your platform launches, there's nobody in charge anymore to fix it. And so when we work with companies that come to us at Prysm, what we're really thinking about is, again, you may not need all of these pieces for every platform, but how do you set up the economic systems that we all know we rely on in a decentralized, reliable way? And one piece I want to point out, I think companies recognize, okay, if I'm going to have an auction, I need to know how the auction is going to be designed. These pieces tend to be more widely recognized. The piece we don't see as much of is governance. How does this platform adapt over time? If we need to make changes, who decides what those changes are going to be, and how do we ensure that the decision this group comes to is what we want to happen? All right, so the reason that I'm here with my PhD talking to you about this is that the problems that we see blockchain companies facing are problems that are solved in decades of research in economics. How many people in here have taken an economics class at some point? Okay, that's almost everybody. I feel like most people end up taking economics at some point. And inevitably, in the first class, there's some definition of economics that I always felt like I read it and I understood less about what economics was than before I read it. So the way I want you to think about economics, and this is true of a lot of recent economics research, is that economics is a set of tools to design economic systems so that they come to better outcomes. And the key assumption that we make is that individuals are independently making choices that are in general that best suit themselves. We used to say we think individuals are rational. We don't think that anymore, but we think that individuals make choices predictably, and a lot of the time they do make decisions that are in general what is in their best interest. And so what economics allows you to do is to say, okay, we know that this is how people make decisions. This is the outcome we want to get to. What's the system we designed to get people there? So some examples of systems that have been designed by economists. Economists do spectrum auctions. So if you know anybody who's worked for the FCC, they're typically designing those incredibly mathematically complex. Economists have designed public education systems. So if you're a public school K-12 student in New York or Boston, you go through a match. That was designed by an economist at Stanford. And the classical example I think of is taxation systems. This is something that economists have worked on for years. What are the goals of our society with respect to taxation? How do people make choices? And then how do we design a tax system so that we get the outcomes we want? And the Nobel Prize Committee has started to recognize this kind of thinking in the awards it's given out over the last few years. So in 2012, they gave a Nobel Prize to one of my thesis advisors, Al Roth, as well as his collaborator, Lloyd Shapley, for what's called market design, which is how do you design a marketplace so that it works. And in 2016, they gave the award to Bengt Holmstrom and Oliver Hart for what's called contract theory, which is how do you optimally design contracts. All right, so what's an example of a field of economics that's useful to blockchain? And again, I know some of you are working on permissioned blockchains, where your blockchain is basically within a single vertical company. This is more around open or permissionless projects. So there's a field of economics called social choice theory. And the field of study is literally about how to design a decision-making system for a group of individuals. What is the optimal system to make a decision? And it turns out that the system depends on the type of decision you're going to make, the composition of the group that's participating, the objectives of the person designing the system, and a ton of other factors. And this is a strain of research that was started in the late 40s by Kenneth Arrow. So his book, he originally came up with his impossibility theorem in, I think it was 48. He published a book in 51, and then the Nobel Prize Committee waited 20 years and gave him a Nobel Prize in 1972. So we're coming up on 70 to 80 years of working on this particular problem. And just to recap, the reason that this is so applicable is that if you're a blockchain entrepreneur, you're designing an economic system in code. People are going to show up to your platform. Generally, they're going to do what's best for them. And as the founding team, you need to establish the rules of the system so that you get the outcomes that you want from your platform. And what we've seen in working with the companies that we do is that if you don't follow the principles of economic design, you tend to get either unintended consequences or things can just go wrong. I'm going to talk about a couple of examples of that coming up next. All right. So you can think about economic design at 3 levels. There's the protocol level, so Bitcoin, Ethereum, IOTA, EOS. Anybody following EOS? Yeah. There's economics at the DApp level, the distributed app level, so this is building on top of the protocols. And then at the ecosystem level, so the economics of the blockchain industry as a whole. All right, so a talk on blockchain wouldn't be complete without Bitcoin. So here's Bitcoin. Let's talk a bit about the economics of Bitcoin. So Bitcoin's provider, he, she, they, I'll refer to this group of individuals as they, had economic objectives for the Bitcoin protocol platform. They wanted it to be widely used, but more importantly, they wanted it to be attractive for miners, for people to come and maintain the blockchain. They wanted it to be secure, and they wanted control of the system to be distributed. And so one of the key choices they made was they implemented what's called the proof of work consensus protocol, or consensus algorithm. And this was successful in achieving some of these goals and less successful in others. So yes, especially when the platform first launched, lots of people wanted to mine Bitcoin. It's also rather secure. But what's been less successful is that it's expensive to mine, and that you can consolidate control by having more money, by investing. If you have a friend who runs a nuclear power plant, that can be helpful to you. And there has been consolidation of control of the platform. So moderate success in terms of the economic control, the economic goals. Another example, and this is one I really like because this is a great example of game theory and the role that game theory plays in blockchain platforms. So has anyone interacted with a token curated registry? Anybody come across one of these? All right, so token curated registry, these are typically DApps. It's a curated list. And the idea is that rather than having Jonathan Gold, who I love, make the list of the best 100 restaurants in LA every year, we're going to have a group of token holders democratically decide what are the best 100 restaurants in LA every year. And the way this is going to work is that the token holders are going to be able to vote for what goes on the list. And the goals here are to first to redistribute power from whoever makes the list to a bigger group of people, and also to produce a list that people want to read. And typically when you read about token curated registries, these goals are sort of asserted. It's like, okay, we're gonna have a high value token, everyone's gonna wanna read our list, and the content's gonna be the content that we want. It's gonna be high quality. But this is actually a strategic game. And you need to go through and verify that the incentives of each party are in line with what you need them to do in order to get this outcome. And it's not always the case. So I think it is possible to design a system like this that gets the result you want. But a lot of token curated registries actually launch and go off the rails. They're in bad equilibrium. So a few months ago, we at Prysm Group wrote a blog post about the game theory of token curated registries. And it was more theory. We didn't, we were just talking about this is what could happen. And then a company came up to us at a conference, and they said, you know what? We have a token curated registry. We launched it. It's supposed to be a list of, let's say high quality newspapers. And the token holders just threw the New York Times off of it. And we don't know what to do because they don't have a governance process. And this is what's going on. So they hadn't gone through the process of verifying that the equilibrium of the system was what they intended for it to be. And then finally, an interesting challenge in a truly decentralized environment is how to manage investment. So there's been a lot of discussion, of course, of ICOs, initial coin offerings. And it's one way to provide investment into a company when it is truly decentralized. But again, there are challenges with, how do you design the system so that, fundraising is more than just fundraising. If you think about a typical VC, series of funding, you'll have multiple rounds. so the team is continuing to work to get those multiple rounds. You may have one of your investors on your advisory board to make sure that you're making solid decisions. And there are some companies that have gone through ICOs, like Cloudcoin actually had a VC on their board as part of their fundraise, but that doesn't always happen. So how do you balance this decentralization with some of the other goals and things that we've expected from our fundraising with more standard platforms? All right, so I want to finish off with just some first principles for economic design on blockchain. So the first thing that we always start with is, what is your business goal? Right? What is your platform trying to achieve? Who's going to want to use your platform, show up, and pay you to use it? And then we go through, what are the goals of the platform? Do you want, for example, a token curated registry? You might want a high quality list, a high value token, and a large user base. And you sit down and say, okay, are those things mutually consistent? Do we need to prioritize these? Is it possible to achieve all of these at once? And then we use the tools from different types of economics to solve for the system that will deliver this. So I think a really interesting example was a platform came to us and they were going to be a token exchange. So the idea was that if you had a token for platform and you didn't want it anymore, you would show up to this platform and you would say, okay, I have token 1 and I want this other kind. And they didn't want to use money, so they just wanted this to be trading. And when we talked to them, they were using pairwise exchange. So if you showed up with one token, you needed another. You needed to wait until the opposite person showed up. And so we talked to them, and we said this is very similar to a problem we're actually quite familiar with. There's a problem that economics has dealt with that was part of the market design Nobel Prize, which is called kidney exchange, which is you need a kidney, I need a kidney, my relative has a kidney, and you match with another pair that has the reverse. And what they found was they could dramatically increase the number of kidney exchanges by doing what's called a ringed exchange. Right? So my donor gives to you, your donor gives to somebody else, your donor gives to somebody else, and then they give a kidney to me. And this token exchange platform implemented exactly the same protocol, and it worked. They have way more exchange going on their platform. If I told you, well, the principles of kidney exchange are going to solve this problem, you'd say, what are you talking about? But the underlying economics was similar enough that it worked. All right, so this has been basically what I call an introduction to the economics of blockchain. What I want you to take away from this is that designing decentralized blockchain platforms is a challenge. These are complex economic systems, and they do require rigorous design. And the more decentralized they are, the more design you need, and the more it needs to be done before your platform launches. And the tools of economics can provide you with the methods of thinking and the different pieces of the puzzle that you need so that your blockchain platform is successful and achieves the outcome that you want. So my name is Stephanie Hurder again. If you want to reach us, our website is prysmgroup.io. That's my email address. I'm on Telegram. And if you're really interested in learning more about any of these topics, we do write regularly on the economics of blockchain. So we keep an active blog. We're primary contributors to the MIT Crypto Economics Lab blog. And here's a couple of we'll be presenting, this is one of, we just finished a research paper, and we'll be presenting it at a conference at the Federal Reserve at the end of July. And we were industry contributors to the MIT Sloan Executive Education course on the business of blockchain. So unfortunately, that's not free. You do have to pay to take it, but highly recommended. So anyway, thank you very much for coming and for listening. Now I will take questions. Anybody have questions? All the way in the back?
Just curious if you could take a look at Steven and their economic model and incentives. Steven?
Yes, I'm familiar with Steven.
I just wondered if you could talk about their design in terms of economics principles and like that, right?
I'd have to go back and look more specifically at it. I'm sorry. I know the general platform, but it takes some detailed study of the white paper. Yeah, sure. Okay.
a good example of a highly curated list that has a good economic model?
You mean a token curated registry?
Yeah, that's right.
So one I haven't found a really great one yet. One I have hope for is Civil. I have my fingers crossed for that one, but no, I don't have a really great example of that. Yeah.
What's the common fault you see when people are setting up new ICOs?
Oh.
Like what games are they not playing?
So a huge one we get is we get people coming and say, does this work? Okay. They come and they say, we need help with our token economics. And the first question we ask them is, okay, why does anybody want to buy your token? What value does your platform offer? And they're like, well, that doesn't matter. How many tokens should we have and what should the release mechanism be? And you're like, no, in order for, especially if you're designing a utility token, like people need to want to come and use your platform. So, the number one thing we try to say is, if you go all the way back to this diagram with the different pieces of, a platform, token economics includes everything, right, to have an attractive platform. Yeah.
So going back to those tokens, I know sometimes they design tokens with multiple uses, like sometimes like prepayment for services for fundraising, sometimes like the government's token as you mentioned, sometimes for fees for users. Have you ever heard of these different users that want these tokens having conflict of interests, then how that kind of impacts like trading the token or what happens or how the platform evolves? Or
Yeah, it's definitely common to see, you'll have someone who's trying to use a token and they're trying to use it for, it's fundraising, it's going to be compensation, it's used for governance, and they're trying to use one token for everything. And one of the points we made recently in some of our writing is that it can actually be difficult to have a utility token that's used for an ICO. Because you'll talk to companies who are like, okay, we want to use this, we want to fundraise off this token, so it needs to be a good investment. We want the price to go up. But then we want it as a means of exchange, so we'd like a steady price. And you're like, well, those two things don't always go together. You have to decide what you want. Yeah?
And just to follow up that, because the price appreciation is really interesting to me, because, if you want your users to use it, it's kind of probably global. So it's probably going to cost differently in different locals' currencies to use that token or buy the token. So have you seen like that impact anything, or the appreciation of tokens impact user adoption?
I mean, definitely. I mean, I can imagine that it would, you'd be comparing it to your local currency and whatever else is being traded. So yeah, no, it's an interesting question. We haven't had too many companies say, come to us and say specifically like, we're based in, a smaller country and our user base is going to use this specific token. How should we design it to make it attractive with respect to, a smaller sort of fiat currency. Green shirt?
Yeah, can you speak more towards your design in the sense that, is it automated as far as like renegotiation, resolution, and all that kind of stuff, or are people actually watching and managing this and saying, well, maybe we need to tweak this and that? How do you create a better incentive system for users?
Yeah, so I think there's two pieces. So the first is you do design it from the ground up. So you say, okay, what is it for a reputation system, for example? What is the information that buyers and sellers are going to want about each other so that they can figure out whether this is the person they want to transact with? And then how do you design a reputation system around that? Do you think that this is what's going to work? And then this is why governance is so important. It's really hard to just design a system that's going to work. eBay has been tweaking its site for decades, right? And so you need a way to be able to go back and say, this isn't really working. How do we make a decision as platform to change what we're doing?
Yeah. So what do you think of like a third generation platform like EOS that's bringing the governance sort of within the blockchain or off-chain, but that you have a separate organizational structure that's pretty novel, that it essentially tries to address these things. They recently rolled back transactions that were fraudulent and created a big brouhaha, and so it's kind of interesting because they're essentially trying to tackle some of these problems.
No, EOS is a super interesting example, and I think the first thing about EOS is they're trying to do something incredibly difficult, right? Like they're taking on this very challenging problem where they don't want to use proof of work, but they do want this sort of sort of self-governed system. And I think one of the things I see with the EOS governance system is that before they launched, the rules weren't necessarily clear. So they have the block producers, and then they have this arbitration committee, I forgot what it's called.
ECAF.
There you go. And the rules of how that organization was going to work, what they were going to decide on, how they communicate with everybody else wasn't clear, right? And so that caused massive confusion. So I think the first takeaway for me there is you have to have your governance system set up before you launch. You know, it's really hard. Analogy we use is it's really hard to determine the rules of the World Cup after the World Cup starts, right? If you're in the middle of the group round and you're like, okay, let's all get together and decide who's going to make it to the round of 16, that doesn't really work out very well. And I think the second piece is that the EOS governance system is complicated. You know, there's lots of moving parts, and I know it was difficult when I first started reading about it to put all the pieces together. So I think the other thing is people have to be able to understand the system that you build. Yeah.
I have a question about the staff that you mentioned earlier,
Yeah.
where they tweeted out the New York Times. So I think there are a lot of people that have the philosophy that actually represents a truly democratic system. So I'm just, but again, there are organizations that believe that it's not the intended use and needs to be moderated in some way. So I'm just wondering, for you as Prysm, how do you reconcile those two philosophies about blockchain?
Yeah, I think it's an interesting question. So I think the challenge with that particular example was that the incentives of the token holders weren't aligned with the incentives of the people who wanted to come and look at the list. So if you ask the company that launched the token curated registry, you know, are the people you want coming to look at your list going to want the New York Times on the list? They would say absolutely. But the token holders were incentivized to just get as many people to come look at the list as they wanted to. So you could think about like, you know, if you look at the relative traffic on different news sites, like you could say I'm going to have a very bespoke, highly curated, sophisticated news site, but if my token holders just want the maximum number of traffic, what I want is every single Daily Mail story ever written, you know, in a list. So I think the question there is you have to be, this is where going back to the incentives comes in, be very clear that the people who are voting are incentivized in exactly the same way as the people who you want coming to the platform. So I think there is a case where you could say, okay, make me a list that will just, I want a list that will get the maximal traffic. You guys are incentivized to make a list with the maximal traffic, go. Right, and that works. But I think they weren't clear on what they wanted from the platform. Yeah.
So I think we all know decentralized governance is very difficult.
Yeah.
Right? And when you also make the point, and a lot of prior research for economics that we should be able to draw from thinking about this economy. So we have any thoughts about what could actually work well for decentralized governance?
That's a great question. I mean, I think that we're going to see new and innovative forms of governance evolve in this space. I think one big difference between blockchain governance and governance that's occurred before is that most places where we're used to seeing voting, you don't have hard forks, right? As much as people said that they were going to secede after the last presidential election, you did not see states peeling off the United States and, you know, forming their own country. And so a lot of governance systems that have been designed assume that even if you lose the election or the decision, you're going to stay. And so actually the research paper that we wrote said, you know, what happens if you use these standard governance systems in a situation where if there's a very vocal, passionate minority, they can just go fork. They can say, you know, goodbye. And I think one of the key things here is that your governance is more than the voting system. It's also what gets voted on. So you have to think about, you know, how does a proposal get brought to the community? What constitutes something that's worth voting on? And then how do you decide on it? But no, I don't pretend that we've solved all of governance, but I think that the principles that we use will help further the discussion. Yeah.
In terms of a permission environment,
Yeah.
these principles apply, and if not, what would you add or remove if you're dealing with a permission blockchain?
A permission so in a permission blockchain environment, there's I mean, it depends on which environment you're working with, but the conflicting incentives come a lot less into, you know, play. If you're thinking about a blockchain that's maintained entirely by a single company, hopefully there are fewer trust issues. And so I think a lot of the questions, and also if you have a permission blockchain that's run by a single company, they do have the authority to go in and decide who gets to use it and what the policy is. So a lot of these issues become less salient. So when we talk, we get a lot of these types of questions from organizations who say, you know, great, we don't need banks anymore. We're going to have decentralized financial institutions. All right, black shirt.
So the DApp example again. So if you give more tokens, shouldn't that automatically make the lists more representative? Because the law of large numbers, it should be more representative. And then I have another question with respect to, is it solving a similar problem like ranked choice voting or something like that?
Right, so ranked choice voting is an option that you could use if you were designing the voting system for a token curated registry. And I think the key piece there is who, with respect to your first piece, is who's getting the tokens. You know, there's a classic example of, you know, if you're having a voting system to aggregate preferences, that's different than if you have a voting system where it depends on expertise, right? Like, if you're thinking about a voting system, you just want to figure out what does the majority of people want to do, that's a different system than if you want help deciding what to do about your, you know, fatal cancer. You're probably not just going to be like, I'm going to have a voting system on Facebook and ask everybody what to do. You're going to say, I want people who are experts in this to help me make a decision. Right. So I think that that's important too. It's not just the number of tokens, but who is holding them. All right, I'll take one more question. I see one more hand, so that works. You in the back.
Do you see any particular industries or marketplaces that are most particularly affected or useful for the blockchain economics, or just where value that is fluctuating considerably?
Yeah, so I love labor market projects. I just have a soft spot for, you see lots of projects that are all about, you know, I've never written a book, but one of the things I understand from people who have written books is that it's actually quite opaque how many copies you've sold. You know, your royalties are a function of how many copies are sold. And so you see a lot of blockchain projects that are helping artists get fairly compensated for their work. And then just generally solving different marketplace problems for labor and sort of reintroducing more power to labor. And I think those are really exciting. All right. I'll take, okay, last one. There you go.
Yeah, I'm quite interested on the relationship between a token market cap and the revenue, company's revenue expectation. I want to know, is there any research or any book, any document talking about the research about between revenue and the market cap?
So hopefully this will answer your question. We recently wrote about a paper on the MIT blog. It's by a professor at MIT and a professor at University of Toronto. And they're looking at a utility token. Yeah. And basically one of the things they argue is the actual cap doesn't matter. What matters is the starting supply of the token and the growth rate. And that's actually what's going to matter. And I mean, all economic models are simplified to a certain degree. It's impossible to model reality in every dimension. But I think that's a really interesting example of a place where basically a hard cap doesn't matter, right? It's all about the growth in the supply of money. All right, I'm gonna call it there. Thank you again to Open and to Cross Campus for hosting.